Your cryptocurrency is going to explode when this happens on the back end of the year. In today's video, I'm going to break down the Feds are not cutting rates, they're holding steady. But let's really break down what this means for you as the middle class working to get out of this debt based cycle. My name is Coach JB. What I work to do is make very complex macro and microeconomic strategies very simple so the normal everyday person can implement them. I have amazing free resources for you. Everybody asks me how I insure my wealth in tax code 7702. People call it the infinity banking concept. We secure our wealth insurance where the banks put their money. It's in the description of this video. You can set up a free consultation with my team or in my social media platform. Click the link. It's a free consultation. Okay. We also have a free book, a 16-page guide that breaks down everything I talk about on the back end of the video and exactly what I'm doing. So let's dive right into this. So the Feds decide to halt rates. So let's watch a video from Danielle Cambone, which I want to give her a big shout out. So she was with Stansberry. And if you're in my academy, I talk about her quite a bit in Stansberry Research. She moved over to ITM Trading, which is super exciting. Her YouTube content has moved over to ITM, which is who we use for gold and silver. Awesome content here. So Danielle Cambone moved over here, and I highly recommend you check out their channel. So we'll watch the first couple minutes of this video. But most people that are into cryptocurrency, I have found, often don't understand or understand why it goes up, why it goes down, and that's why people get wrecked, because everybody thinks they're going to get rich quick. And the problem is you have to understand money is just a wave. It's been doing this in humanity over and over and over again. Yes, we're going into World War III. There's no money in the system. When they go to war, they print money, right? We're in a debt-based society. There's no real money, guys. So it's monetizing debt. There's only two things they can do. They can lower interest rates, print more money to create more debt, to create more income so that we can have more jobs, or they're going to have to reset the system at some point. I mean, or you just keep printing, monetizing debt, printing, monetizing debt. That's basically how it works. So think about the game of Monopoly. The indoctrinated people playing Monopoly, what do they always try to do? They try to get as much cash as they can because they're indoctrinated. Who always wins the game? The person who owns the most cash generating assets. Every time you land on their square, you have to pay them. So Monopoly gave us the blueprint, guys. That's the game. So as we listen to this, and I'm going to break down on the back end of this what I believe is going to happen with interest rates and why I believe that they're stalling interest rates right now. So check this out.
Well, it looks like the Federal Reserve will wait until the second quarter before cutting interest rates. This is according to a majority of economists polled by Reuters, with June seen more likely than May and less easing forecasts this year than markets now expect. Well, we're going to get Chris Versace's take on this. He is the Chief Investment Officer and Thematic Strategist over at Thematica Research. Chris Versace, always good to be with you.
Always good to be here.
So I want to get your take on the Fed. I want to get your take on the S&P and so much more. So let's start with our friends over at the central bank, because we're speaking ahead of the much anticipated January meeting. What do you think they're going to do here? I mean, I read what the poll says, but what do you think? What's your gut take?
So, I've been sitting back and watching the market continue to fixate on 5 or 6 rate cuts in 2024 with the CME Fed Watch tool, the tool that we all look at, still indicating that there's a good chance they're going to get started in March. And I've got to be honest with you, I don't really see it. When we take a look at the December inflation data, it was actually up on a year-over-year basis compared to what we saw in November. So arguably moving the wrong way. But we've also seen some other tailwinds emerge that kind of raise some questions about how fast we're going to close that last percentage point from around 3% or a little over 3%, depending on the metric you're using, to the Fed's 2% target. And here's the thing. We know that the last mile, so to speak, is always the slowest, right? These incremental gains. And, we're kicking off the December quarter earnings season in earnest, right? We're starting to hear companies take down guidance, but what I'm listening for is further progress on what they're seeing in their input costs. And it hasn't really started to show and paint a picture of robust gains. If anything, we're hearing more companies ranging from Tesla to Tractor Supply and others talk more about the disruptions that what's going on in the Red Sea is going to have on their business, not only in terms of longer delivery times for parts and materials, but higher shipping costs, higher insurance costs. And, typically when we see these types of supply chain
Key.
disruptions, what do companies do? They start paying premiums.
Yep. Okay. So here's what we're heading into in 2024. Okay. So we'll take a look at this. So they didn't change rates, right? There's all the news was coming out predicting what was going to happen. A change to this one clause could be the most important part of the Fed meeting. It says a phrase that has signaled the Fed's willingness to approve additional policy firming has underlined its willingness to keep raising rates. Most of the public statements that officials have delivered in recent days point away from a hurried cut. Markets, however, expect aggressive easing this year. So everybody's confused. The markets are like, what is going on, right? So they held rates steady and indicates it's not ready to start cutting rates. So what this did is it panicked the markets, okay? So when the markets panic, this starts selling off. So what happens is, well, here's what I think is happening, okay? You have to really, you don't have to do anything. But what I understand is that this is a cycle. This happens over and over and over again. Okay. So they got high inflation. They're trying to get it down to 2%. Okay. So they're trying to get it down to 2%. They can't keep lowering rates or we're going to go into hyperinflation. So they have this balance that they have to do right now. But here's the great thing about a presidential election and their egos. They are going to lower interest rates on the back end of the year. And because we are part of a 4-year cycle in cryptocurrency. Please listen to what I'm about to say. A 4-year cycle in cryptocurrency. We have the Bitcoin ETF. We're done. It was priced in. Okay. Hype is over. Bitcoin halving April. Then it's going to go into May, June, July. You're going to start to see your crypto start to go up. Okay. Then you got August, September, October, November. They're going to be all getting ready for the presidential election. They're going to start pulling rates back. What that's going to do is make the markets look really good for the presidential election. Here's the thing, though. The unsuspecting public is just chilling in a 401k. It doesn't benefit you. You can't pull it out of your 401k. You get penalized, right? And you're afraid to because of the fees and all this stuff. And us who are investors, who are invested in the assets and we buy the dip and then we sell the news when it comes up, we're going to get very, very wealthy if you do this correctly. So on the back end of the year, they're going to start cutting rates, okay? And that's going to cause hyperinflation, which I believe purposely is going to destroy the middle class. Guys, there's no money in the system. Cash is fugazi. It's fake. Crypto is fake. We're taking fake money. We're putting it into fake crypto. Your job is to understand the debt monetization. When they lower interest rates, money is going to flood into the fake markets. You pull profits from the fake markets and then get it into actual tangible things that have been around forever. I use insurance. I'm getting into real estate, precious metals, business. And then when I make profits from those real tangible things, I put it back into the fugazi, fiat, and things like cryptocurrency. When it profits, I pull. It's a very simple strategy. Think about Monopoly, guys. Monopoly gave you the secret. The person who owns the most assets at the end of the game wins. But we're indoctrinated to think we're trying to get the cash. But every time you land on that person's square, you're paying them. Okay, so we have to get on the other side of the quadrant, right? And it's your opportunity in crypto to do that. I'm not saying you have to, but those are the things that I did. So I invested in crypto, very speculative asset. I've been stacking since late 2019, 2020. I've been stacking crypto. When it went parabolic in the bull run, I pulled insurance. I bought more business. I got into more businesses. I made it real tangible things. When I made profits, I've been buying back in during the bear market. When the fugazi goes back up, the fake money goes up. I'm pulling, securing, compounding, growing, buying back in. And I repeat the process, right? And so what I do is I buy liabilities. I will only be buying liabilities when an asset can pay for it. It's simple, but it's so complex because they indoctrinate us at a very, very deep level to not understand this. That's why we created tools like Merlin. Okay, it's 30 days for free, guys. You have to have an exit plan if you're getting into crypto. There's no why get into it if you're not going to pull profits. It's kind of like this whole go to school, get a job, sit in your 401k, guys. The middle class will be sitting there. I'm like, wow, look at my 401k. It's going up. I can't touch it. I can't pull it. I can't do anything with it. And then they go to buy gas and groceries on the back end of this year, and it's going to be super expensive. Houses are going to be super expensive. And the wealth gap is going to get bigger and bigger and bigger. Then you go to retire with your 401k. and it's going to be worth nothing because you're saving fake money in fake markets and you're not pulling profits, right? The key is in investing to pull profits, get it into real world tangible things, assets that create cash. You take the cash, you put it back into markets, you create more cash, richest man in Babylon. It's a very simple strategy once you get the rhythm down, okay? But again, always seek wise counsel. Always seek wise counsel. Just be careful with these crypto bros and crypto gals that are making you believe you're going to get rich in crypto. We saw so many people, it got shot up and they've been depressed since 2022 when it dropped 85%. Yes, you can make a large amount of money in the markets, but not unless you pull profits, and you're not going to make it if you're following the public. So if you're sitting in the barber shop or in the grocery store line, Robert Kiyosaki said it the best. I think I'm paraphrasing, but he said if he's sitting in a grocery store line and people are saying they're going to get rich in real estate, he starts selling real estate. If you start hearing everybody talk about cryptocurrency, it's time to start selling some profits. But when you sell that profit, make sure you pay Uncle Sam, do your thing. Put it into things that'll last a lifetime. Put it into real estate. Put it into insurance. Put it into things you can borrow against. If you put it into a property on the back end of this year, when interest rates go down, that property is going to appreciate like crazy. Everybody's saying, wait till interest rates go down to buy a home. That's the worst thing you can do right now, guys. If you're in the market to buy a home, get it now before interest rates go down. Because when these interest rates go down, that house is going to go through the roof. So you're going to be like, oh, I got a 4% interest rate, but now the house, the $600,000 house is 1.2 million. And you got to go buy a freaking shithole house because you waited for interest rates to go down, guys. Don't play the interest rate game. Play the money game. Okay, you got to understand all debt is all money is fake. Our fiat system, it's called fiat. It's fake money. The feds can print money when they're in trouble. You can't. So you have to understand when they print, where are they taking that money to? They control the markets, guys. So if they control the markets, if the Federal Reserve was created and is a group of bankers who created a bank to support the banks, do you think it's designed for you to win? It's not designed for you to win. But if you know the game, you can be played, okay? So remember, Monopoly. Who wins the game? The person who has the apartments on Rodeo Drive, the person who has the most assets, because every time you land on their square, you have to pay them. And then they take that money and buy more assets. And guess what? You can borrow against assets tax-free. The game is designed for you and not against you. Remember, if you're seeking something and going down a rabbit hole, you will find it. That's how the brain is created. God created the reticular activating system. If you're seeking hard enough, you will find it. So be careful what you're seeking. Be careful what you're looking for because you're going to find it. If you think everything is a conspiracy, you're right. If you think everybody's against you, you're right. But if you think that you are part of a powerful ecosystem that God created and that you win in the end, you're right. If you follow the principles of Jesus and reverse engineer everything and invert everything backwards like you did after 18 years, you're right. This is your truth, your game. You can do this. Invert everything backwards that you've learned, and you will be the richest man or woman in the world. I love you guys. I appreciate you. As we always say, warriors, rise, get your shit together. Let's go. Love you.